Wow. Wow, 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 wow. Wow, 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 wow. What's going on, guys? A little power hour session. The market already taking off. A little bit of power, a little bit of hour. What's good? All right, all right. Market Flow Trader community, represent little Market Flow Trader power hour member only. If you're part of the Market Flow Trader community, well, you're here to see what's going on. I want you guys asking questions. I see people asking questions in the community, on the app and all that. Whatever question you have, if you want to talk about candlesticks, you want to talk about entries, exits, whatever it is, I'm here for you guys. I got a million other things I could be doing, but well, I'm here to be your, I don't know, be your guide through this power hour. On the market, look at this move up here from the 19s, ripping back up there to the 44s. Absolutely insane move from the 20s up there to 40s, just like that. This is a 3-minute candlesticks as always. And look at that, absolutely just insane move. So why did that happen? Why do you guys think that happened? I would say probably because we had a kind of a double bottom kind of thing going on down here. Once we couldn't sell through that 20 level. What's interesting is earlier this morning, pre-market or whatever, during the live stream this morning, we talked about that 20 area being a key area. And the reason I thought that would be a key area was if we go back here and we look kind of that 22 area, that 20 low, that was back from Friday, December 30th. So the last day of 2022, the last trading day of 2022, we had that support, the low. So you guys, you got to be looking at these big picture. Always be looking at the bigger picture here. And obviously there's the big picture that we had that support at the 20s. And, you know, once we broke through the 40s here, it was like, okay, well, there's a pretty darn good chance that we're going to kind of test this low again from that Friday move. So that's pretty much what happened. I mean, I think we had a little bit of a dip below it, just kind of running some stops below there. But in general, the action was pretty clear. And I would say, you know, where would be your entry to want to get long here on this? Really depends on the time frame you're looking at. But on the 15-minute time frame, we had the MACD cross actually a lot earlier. MACD was bullish from here, and then we had a little pullback, kind of double bottom testing. So you really could have played it two ways. You could have tried to buy that double bottom there. If you were looking to kind of get long off the bottom, you could have done it that way. But I think really the overall kind of best entry would have kind of been in this area once we start pushing back up on the 3-minute chart, getting the MACD crossing and that breakout there. So let's go. Leo with the first question of the day, saying that something I've been having issues with is his entries. Is it better for candles to break a trend and get in, or wait for further confirmation, such as waiting for the trend to break? It's a good question. That's a really good question. I think this comes down to a couple of different factors. Really, let's think about it. I think the best way to think about this is, number one, what's the momentum? Like, are we getting moves? Is the market moving, or is the market kind of grinding, pushing up to resistance and then pulling back? You really got to kind of look to see what the gauge the market, right? Is the market showing strength? Is the market just kind of pushing, but also kind of pulling back, pushing, pulling back, pushing, pulling back? Or, you know, on a move like this, is it like rip? Are we ripping back up to the upside here? And as we're ripping back up, I don't really want to, you know, there's not much time to wait for a pullback. And, you know, maybe if we go to the 1-minute chart, we could probably see it on the 2000 tick chart. You know, here on this move, you're pretty much like consolidating. We get the little breakout. I don't think you would have entered, you know, it's always in hindsight. I don't think you would have entered like right here at the 20s, but you would have be better off kind of waiting for a little bit of a pullback. We had a little bit of a pullback right there at 25. So you're kind of entering, you know, 26s here for this kind of breakout right there. But it really comes down to just the overall momentum. Like, what is the market telling me? You know, there's times where the market's kind of just grinding. You know, we're just kind of grinding sideways. We're not getting those big explosions. And then other times we're getting those big explosions. When we're getting those big explosions and we're pushing through levels, I don't really want to wait for a pullback. I want to kind of jump in and get into that action as we're kind of squeezing up. Because the problem is, you know, if I jump in for a pullback, I wait for a pullback. Let's say I wait for this pullback here. Well, now we just kind of ran out of steam and we're not getting that explosion. So we're kind of consolidating. We're turning this previous area of resistance into support. And if we look here at the SPY, that was right where that pivot is as well. So really it comes down to just kind of the market conditions at that moment. There's two ways to play it. You can play the idea of trying to get those pullbacks, but when the market wants to go higher, the market wants to go lower, sometimes sitting around waiting for those pullbacks, you're just not going to get those pullbacks. And you end up waiting for the pullback. You end up jumping in once the market kind of makes that big move. You wait for the pullback, and then now you're stuck. So it's like, okay, you jump in here, you jump in on this pullback here, and then look, now we're just kind of chopping. So we made that big move from the bottom back up to the 44s. That was kind of like, you got to get in on that, and you got to ride that and then get out kind of thing. But I definitely wouldn't want to just be like, oh, now we're waiting for a pullback, I'm going to jump in here at 36 and just like hope and pray that it's going to go higher. No, I think that's a good way to think about it. Yeah, I mean, it's definitely the choppy, like right now we could start chopping again, just kind of chopping around here at this level before making another move. So you really got to gauge the momentum. I think the Bookmap is a really good way to gauge that. If I'm looking here at the Bookmap, like let's look at this move here. Like look at how we had all this liquidity down here at the 15, 16 years. So we had a lot of liquidity down here. I hope you guys can see that, right? Everyone can see that? We got a lot of liquidity we're holding there. And then look at how we ramp up. We just ramp up through this move. And actually earlier today, I took a trade and I was just sitting there and I just saw the momentum coming in there. And I'm like, hey, do I want to wait for this momentum to fade, or do I want to jump in when that momentum is there? And yeah, I want to jump in when that momentum is there, obviously. If we look at the 2000 tick chart, this is another great thing to look at here. We get above that EMA there. You can see it's just green, 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 green. So this is what I love about the 2000 tick chart. The 2000 tick chart is really showing me like what the pure price action, showing me the action there. So for me, it's like, okay, I want to get my confirmation, on the 3-minute, the 15-minute chart. I want to see kind of what the trend is doing, what the action is doing, where are we at with the pivot points. And then I want to be like, hey, look, 2000 tick chart is just printing. So I'm like, I want to jump in here. I don't want to wait for that pullback. I'm not sitting around waiting for a pullback. Once I see that we're going ding, 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 because you can see how it just ripped up, even from the 34s. Like this is a pretty big move on the 2000 tick chart. If you think about it, like this is literally transactions coming through. So to go from 34 straight up there to 39 on these candles, that's momentum. Like momentum is there. I want to jump in. The problem is if I wait for that pullback and like I said, jump into here, maybe we chop around again. And that's exactly what we're doing. So on the 2000 tick chart, I'm using the 13 EMA, the 13 EMA on the 2000 tick chart. I think it's a really kind of good combination to give me an idea of like momentum. And you can see like when we make these bigger moves, we kind of just get right through that 13 EMA. But then when we're getting the choppier moves, we're kind of just chopping around the EMA. So a great way to look at it is like if I'm looking at the 2000 tick chart, is the EMA kind of going sideways, or is the EMA kind of ripping up or down? This move here, look, it kind of just huge, I wouldn't say huge, but you can see very kind of quick little reversal back up. So that's telling me momentum's there. There's momentum, but now look what's happening. The 13 EMA is kind of going sideways with that price action there. So it's like this is the big move you want, and then this is the sideways action that we want to stay away from. Would I draw a diagonal line from the prior high? So if you look at the 3-minute chart, I mean, this is, it's pretty much like that for the 3-minute chart there. And like I said earlier, you probably wouldn't have jumped in right here just because we had that overall downtrend. I would have waited, kind of getting that breakout there. So you're looking like 24, 25. That's kind of like right below this high. So this is kind of a little bit of a tricky one, because I would say that yes, you had that little breakout there, but you would have kind of more wanted to see us break through 26 and then get long. So, my entry really would have been like the high of these candles, kind of jumping in this area once we break above that high right there. Does that make sense? Anybody? I think that makes sense. Because, okay, we push up. Like, do I want to jump in, right here in this area, knowing that 26, 27 levels right there, resistance? Probably not. So it's like I really kind of am looking at these candlesticks here at the 26, 27s, and I want to break through there, and then I want to jump in once I see that momentum kind of squeezing up there. And, you know, where's my stop at? If I'm jumping in, let's say I'm jumping in at 26, you know, my stop's really 24s. The low of these candles, kind of that flag breakout, which is a really good risk reward. You've got a 24 stop on a 27 entry. The high on these candles, 27.25. So 27.20, 27.50 being your entry, your stop below 24.25. And then where's your target at? I mean, your target's really kind of like to the back to the, like this pivot area. I would say, yeah, like 40s being your target there. I think that's a pretty good, I mean, this is a really good overall risk to reward. You're jumping in, risking 3 to 4 handles. We talked about this the other day in the community as well. The idea of, you know, is it so simple that you can just go every trade be like, well, you know, I'm gonna risk 5 handles. 5 handles I'm gonna risk. No, it's not that simple, because if I have an amazing risk reward right here, I've got a risk, you know, I'm buying 27s. I'm risking the low of these candles, 24. We got that little low, the bottom of that candle right there was 24.25. So I'm risking 24s. I'm risking 3 handles for a very doable, you know, 10 handle move to the upside. I mean, I'll take that all day. That's like amazing setup, right? Yeah, I mean, it's the wicks. The wicks are just as much as important for support resistance as the bodies. And you can see, like here, we had that little red candle, right? We got the bottom of that wick, 24.25. So yeah, you entries at 27. Once we break above the high of these candles here, we break above that. We're jumping in long. You can see you had a little bit of a test actually of there. But overall, I mean, that's it. That's like, this is the money maker. Get this setup. I'll take this setup any day. Any day. Risking 3 to 4 to make 10 to 15. Why am I expecting to go that high? Well, I mean, we just had this leg down, right? This is the leg that we moved down. We broke through that move down. So is the idea the market's going to just stop right here with this momentum? No, I think overall this is more so we're going to test this resistance, right? Because look, what do we got there? Resistance at the 37, 36 level. So, you know, it's like, here's my entry. Get rid of all this. So draw a little bit better. So like, here's my entry at the 27s, right? I'm jumping in right there. And where's my stop at? My stop's at this resistance up here. And that's exactly what happened. I mean, I think, yeah. What do you guys think? Does that make sense? Because look, I mean, we basically invalidated this downward trend. Now that we're breaking back to the upside, I mean, this move right here, it's hard to, I wish I could just like download my brain and just like make it a computer and my brain could just work. But this is also like, it just takes time. It takes a lot of time just kind of watching the market, becoming just more and more familiar with these moves. You'll see these moves over and over and over. Like what is happening with this move, right? We have a downtrend through this move. If we were going to go down, where would we go from this right here? Like if we're going to go down from here, well, we're going to go down like that. But look how we broke back to the upside, and look at, this is like, I mean, this is a bullish engulfing candle all day. Got a big body on it, just rips back up. And the thing is, like, if you're sitting there really kind of watching these moves too, you're seeing that price action, it's even more obvious in the moment because that price action is just like ripping back up there. We saw there on the Bookmap. I mean, the Bookmap's just showing you that all that liquidity. Look, we go ding, 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 ding. We go to 27s here, and then we're ripping back up, and we're getting volume coming in there. We're getting that action. And yeah, I would say like I said, you're not always, the thing is, like, people think that you should always be waiting for pullbacks. Like, oh, I'm always gonna wait for a pullback once this move happened. But the thing is, like, we went 20 handles, no pullback, right? There's literally 20 handle move here, no pullback. So it's like, what am I gonna do? Am I gonna sit here and just watch this thing go higher and higher and higher without jumping in, knowing that we just broke out of this downward trend? No, I'm getting in. It's like, there's no question at that point. The trend has been invalidated to the downside. We got a double bottom. I mean, we have so many things telling us that this is time to be long, right? We got double bottom. I mean, this is textbook. Double bottom. We didn't break to the downside. If we were going to go lower, we were going to break to the downside there. This move right here, I mean, if we were going to go lower, we're going to break to the fucking downside. You know, like at this point, it's what are you going to do? You're going to wait? Look at that. I mean, that would have been like, okay, we're breaking the downside. We're going lower. Perfect. We know that it's going lower. But look at how we broke to the upside. I mean, that was aggressive. You know, we start taking out any resistance. The thing, I wish we could have like the book map. I wish I could kind of record this move as it was happening here. But in general, you know, it's like that momentum is there. And we don't want to sit around and wait for the pullback. Now the question is, okay, you know, what do we got going on? We pushed up to that SPY VWAP. We got the VWAP on the ES at the 56, but we pushed right up to that SPY VWAP there. We got stuck. So now it's like, okay, you could, if you really want, I mean, you could have waited, I guess, you know, you could have waited for this pullback consolidation level. And now you're looking to get long, you know, over this kind of area on that high. So you're looking to get long like above 44s here when this thing breaks out. I mean, maybe the better entry would have been like right here, but I think you're just basically waiting for 44s to break. And then the idea is over 44s. The idea, I'd say over 44s is pretty clear to this area here. And why do I think it could go to the 50s from there? It's like, look at that move down that we had. We broke through that 50 level and crashed down here. So there's not, like, we didn't have a lot of consolidation, a lot of battling at this area. We just basically had a wash right through there. So the idea is on this push back up, well, we're going to get a push kind of right through that area back up there. Right? Does that make sense? When you get big moves down, you normally get big retracements back up when we go through those areas again. So now here we go through the 44s. Do we push 45s? And look at how, look, we're quickly moving. Look at how we're quickly moving right now. Like I said, that's going to quickly want to move up there because we had that big move down quickly. When the market moves through a level quickly and then it comes back to retest it and then wants to get back through that level, well, it's going to quickly move through that level again. It's not going to sit here and just stop. Now that I say that, it's probably going to, now it's pulling back here. But in general, there's that 44 break. So here, going into the end of the day here, I think the goal, the idea is the market wants to push back up. The only thing playing against us right now is, guess what? We got a pivot right there. Where we stop at on that move. We saw that little explosion and we got stopped right there at that pivot. So now the question is, do we get above that pivot and then push up there to the 60s? I mean, normally I want my kind of breakout idea here. What I got? Came in. I want my break. Why I got rid of all my indicators now on this chart. Let me see if I can. No, don't save it. Don't save it. Oh no. Oh no. Load layout. Great. All right, load layout. There we go. We're back on the VIX now. I mean, we're breaking to the upside here. I would say that we're going into the 50s if we can get above that pivot there on the SPY now. We push above that pivot there and try to push up into this level. We pushed above the VWAP. You know, everything's lining up to the idea of this wanting to go higher now. And let's see. And we'll get that push above that pivot point and then up there into the 50s here, end of day. If we look at the book map as well, we got a lot of liquidity sitting there at the 50s. So above 50s, we go right to 57. DB07, I'm working on a book map video for the community. Don't worry, it's coming. I'm working. I got a lot of stuff to work on. We've been on vacation. I know it's been Christmas time, the holidays. So we're back in it right now. 2023, bigger than ever. So patience, my friend. It's coming. It's coming. Nikita, why not 38833? What do you mean? I'm not sure what that question means. Well, either way. So the market trying to push through that pivot now. We know that pivot's right there. Leo, like you said, you could wait for that pivot to break out here. But I think, you know, we just had that breakout here. So more so, I'd be looking for this thing to just rip. And we know that on the book map, I mean, the book map at this point is very clear to see if we can push over. I'd say if we push over that 50 level, if we break through 50s here, I'd be jumping in long pretty quickly, I would say. Let's see what happens. This is a great example of when the book map is very important to be looking at. We know there's just a lot of liquidity sitting there at the 50s. So for me, I'm just going to be waiting for that breakout over 50. Nikita, I don't understand why you don't understand the pivots, my friend. It's so simple. The pivot points, it's there. There they are. They're lines on the chart. If we get over this pivot here, where are we looking to push? That next resistance there, 382. Right? We pushed off this pivot earlier. We pushed up to this pivot. These pivots are just overall support resistance ideas, you know, where the market moved the day before. Yeah, so I mean, you're really looking for this to break out over this pivot point at this point. So I would say the 50s would be a great area. We get through that pivot on the SPY. We push up there through the 50s on the book map. And then we look to get that move up there to 382, 50, 57, 58 level. And yes, previous pivot areas can act as support resistance as well. So over the 44s, we got to 48. You know, the thing is, guys, like it's never going to be 100% bulletproof by any means. It's not always just simply like, hey, buy the breakout and then wait to make money. Like, it's not always going to be, you know, that simple. I wish it was. But overall, I mean, if you jumped in, let's say you jumped in long. If you jumped in long here at 44s, it pushes 48s. I mean, at that point, if it doesn't break through 48s, I'd be getting out. I'd be getting out for break even. You know, I'd basically, at this point, once we can't break through 48s, I'm moving my stop up to break even or a little bit right above my entry, because if it's pretty clear we can't push through there, well, I'm not going to just sit there and hope and pray, right? Where do you put your stop? I mean, your stop's really based on the candles, the price action, not so much where the pivots are. Remember, the pivots are just guides. The pivots are not, you know, it's not cut and dry like, hey, buy here, sell here. The pivots are really just giving you an idea of where the market can move. And I think we got a pretty good example of that. You know, we pushed up to this pivot, we broke through it, we kind of chopped around, we pushed this pivot. I mean, it's literally on the dot. The high on that candle right there was 381.14. The pivot point is 381.15. So, I mean, I think that's pretty much fucking on the money there. And if this right here doesn't prove that the pivots work, I don't know what would. Really good example of that. So yeah, I mean, here, end of day, going in end of the day, if we can get above 50, I look to get long above 50 at this point. Yeah, I mean, pretty much at this point, you're just waiting for that pushback above the pivot. Could you jump in trying to buy this dip right here, knowing that we have support there at the 36s? I don't really love buying the dips. Some people love doing that. For me personally, I'm just not a big dip buyer. Nikita, I would just at this point, to get long, I'm not doing anything until we break above 50 for a long. Unless like we start ripping back up quickly here, end of day, and then we get that break. Would jump in a little earlier there, but right now, I mean, there's just no reason. You definitely don't want to get long at that pivot point. You know, I wouldn't want to get long right here. I'm not trying to buy right before we break through there. That's for sure. MACD looking a little hesitant as well. Would I want to short below 379? The thing is, like, not just because the market's pulling back here doesn't always mean it's a good short. I mean, we're going into the end of the day here. Do I want to be short knowing that we've got that pivot right here? It just really comes down to price action. Again, like, these pivots are, this is not like, the strategy is not just trade exactly what the pivots are doing. We're looking for multiple things, you know? I definitely would not want to be shorting, like, I wouldn't short right here, knowing that we got that support right there now. Well, I mean, this is more so, the candle hasn't closed yet, so I wouldn't say it's 100% an engulfing candle. It's definitely not good price action for the bulls, but at the same time, we know that we kind of already chopped around in this level. And you got to ask yourself, like, what did we just do? What, like, overall, what did we do today? You know, like, let's just think about mentally, like, what did we do? If we look at the 15-minute chart, what did we do today? I mean, all we pretty much did overnight, we pushed up here to the 907s. We got stuck this morning, and we basically pulled back to where we closed, to kind of where the low on Friday, right? So it's the idea of, like, do I want to just short just because we're pulling back right here? No, because we already know that we've kind of gotten down to this level. You know, that the move earlier for shorting was from here to here. And it's like, okay, the market, you know, loves to kind of retest areas and kind of move liquidity around and kind of find areas where the buyers are sitting at, where there's sellers sitting at. So it's like, just because, you got to think, like, just because the market in this very moment, like, if you look at the 1 minute chart, let's look at the 1 minute chart. You know, just because I look at the 1 minute chart, I'm like, oh my gosh, I should short, right? I should short. Well, yeah, sure. If you're just sitting here looking at these little 1 minute chart and you're not focused on kind of what the market's doing, it's easy to kind of short here and then get chopped up and then end up losing money. Like, I want to be looking for trades that are my target. My overall plan is to kind of look for the market to move to different levels. Like right now, you know, I would say today in general, like on this move here, you know, we got the move. The move happened. The move happened from the 900s to the 20s. I mean, that's a totally, you know, typical move, like a good move for the market. Market moved down here. So it's like, do I want to keep shorting thinking that we just kind of, you know, if that makes sense? Like, I'm looking, like, what did the market do today? Did the market sell off and break through a level and keep going? Like, where is that next level at? No, we sold off in here. We touched this level. And then now the question is, okay, like, do I think that we're going to go lower from here after we bounce double bottom off that support from Friday? Or do I think there's a better chance that we kind of maybe rally up here end of day? We still got 30 minutes. You know what I mean? I wouldn't short here. Like, either way, like, I don't think I would short here. You guys, just because the market is going down or going up does not mean it's a good trade. Remember that. Like, just because the market is moving does not mean it's a good trade. The market made the move, right? The market literally made the move today. Like, this was your move this morning from the 900s down here to the 20s. We talked about that 20 area this morning when we were up here in the 60s, 70s. So there's your move. Now what happens? The market can kind of chop around here, and it might not be a good trade. There might not be a good trade. We got to think about that. Just because the market is moving does not mean it's a good trade. People are so, like, focused on, like, oh, is it a short? Is it a long? Like, what should I do? Should I get short? Should I get long? Like, no. We just did it. We just did. The market moved. The market made the move today. Like, this is the move. It moved down here. So it's like, it's like, be patient. Wait for the next setup. You know what I mean? Like, I don't want to, like, sound mean, but I think people are just constantly, like, looking for setups and looking for trades constantly, but there isn't always a good setup. Does that make sense? There's not always a good setup. Having insane patience and discipline, it's what's going to save you from losing money. You know, having discipline to be like, hey, look, The market made the move. Did I miss out on the move? Yeah, sure. I didn't make a $20,000 a day. Does that, just because the market's open right now doesn't mean I should trade it. You know, just because the market's moving doesn't mean I have to jump into a trade here. You know, like I think it's so funny. Like people are always just like, oh, now what do I do? What do I do now? Do I short? Do I go long? What do I do? Well, if you can't, like, I think the less that you think about like what you should do, or like, oh my gosh, should I be long or short now? Like either way, it doesn't matter, because it's a coin toss, right? It's 50-50. It's a 50-50-50. It's a 50-50-50. It's a 50-50 chance at this point that the market goes up or down. The only way that the odds change at this point is if we break above 50, above this resistance here. Well, then the odds are pretty good that we move up kind of to that next level, that 60 to 70 level. It's that simple. Like, it's literally that simple. I'm telling you right now, like my whole entire trading changed the minute that I stopped worrying about like constantly taking trades. Like, it's so funny to think about, but like the minute that you stop thinking about taking a trade every 5 seconds is when everything changes, when you can actually like focus on what is actually going on. And look, people were like talking about earlier, like getting short. Oh, should he short right here? I'm like, well, no. Look where we're at on those pivots. We're right in the middle on those pivots. So when we're in the middle here, we're back in this chop zone. Like we broke out of this chop zone. We got back into the chop. Do I want to just do something right here? Do I want to just short, go long? What do I do? I mean, Nikita, could you get in there at 42? Yeah, maybe. Like, I'm not gonna sit here and tell you like you shouldn't, coulda, woulda, but me personally, I just don't think there's any reason to trade this right now. We're right here in this middle area. I want the setup, I want the trade to be like so obvious that it's like, huh, well, shit, I got, you know, like I don't even want to think about it. I don't want to have to like look at it and be like, huh, I don't know. What should I do? Should I do long? Should I do short? What should I do? Like, it shouldn't be a question. Like, when you look at the chart and there's a good setup, it's clear as day. The moment that you just like, you look and you see like, wow, okay, I'm jumping in. This is the move, right? It should never be a question of like, oh my gosh, what should I do? But like, it's all about quality over quantity. Like, that's my big thing. Like, if you look at, like I showed you guys earlier, my top step results for the last, like, 2 weeks. I didn't take a lot of trades. I took very easy trades, made $2,000. No loss. I didn't have one loss. And that's because, why? Because I didn't force anything. I didn't sit there and go, oh, it's moving, I got to jump in. Market's open, I got to be trading it. No, you're good. Ask the questions. I want you guys asking questions. This is the whole point of this, I don't just sit here to talk and listen to myself. Like I said, I could be at the beach right now surfing or something, but I'm here for you guys. So I want you guys to kind of change your mindset. Instead of thinking about like how many trades you can take, I'm thinking about like, hey, what is the best trade I can take? Because the thing is, like, if you can start getting to a point where you're only taking the best trades, well, then you can size up. Then you can trade more contracts, get one good trade, and then you're done. It's that simple. Don't overcomplicate it. Don't try to force it. And look, people were thinking about shorting earlier. Oh, we're going to get short here. Wow. Slow down. Well, there's no point in getting short until this thing tells you to get short. And again, on the Bookmap here, end of day, what I would be looking for, if I wanted to get a trade here, I'd say over 50, there's a good chance that we can push up here. Over 50. Got the VWAP on the ES at the 53s. So that could be a little bit of trouble. But I mean, the market's moving here, right? It's trying to move through here. So we get through 48s. I'd say maybe if we could push through 48s, we could break through 50 here. Just watching what's happening on the book map right now. I want to see us just kind of eating through that liquidity, taking out liquidity and moving, right? Just taking it out. So let's just focus on the book map here and kind of think about what's going on here. We got that 48 right there, a little bit of VWAP on the VWAP's at 48 on the book map, but the actual VWAP on the ES is 53s. We know that pivot point's right there, so pretty much the pivot points here in this area of liquidity. And now look, it's trying to push. But would I not get in at the 50s? Yeah, I think you can get, I mean, if we break through that liquidity at the 50s, you could get in at the 50s. I'd say the only, the thing is, again, like just because the market is moving doesn't always mean it's the best possible trade, right? It's not just because, okay, we break through 50s, well then what happens next? Now we have the VWAP at the 53s, right? So it's not always just like, always so simple as just, hey, buy here, sell here. It's always kind of a battle. Like, okay, well, we're pushing, but it doesn't mean it's a good trade. Global plus and global, not sure, to be honest. I haven't really sat there and looked at all the different. So I just bought the best subscription for Bookmap. That would be a better question to ask actual Bookmap people. Customer service, maybe. So now we're just kind of watching that 48 level. If we push over 48s, we know that liquidity right there at the 50. It's really just about, we want this scene, we want it just to kind of start ramping here. I've not used Tick Strike. I mean, there's so many different tools and indicators and programs out there. I mean, I can't use them all. There's too many. I'm definitely kind of liking what I got going on right now. So you can see we got a big kind of buyer just popped up there, took that out, some liquidity, a little pullback here. That 48 level once again holding us down. You can see on the 2000 tick chart, right there, 48's holding us down. So I'd say over 48, we start moving. Only problem is we have that 50 area sitting there, but I think end of day, we should be able to push through that if we can get through 48s here. On one of your videos, you got 3 moving averages on your 3-minute chart. However, I've seen you also use EMAs. They're all EMAs on the 3-minute chart. It's the 8 EMA, the 15, and what is it? Yeah, the 8. No, it's the 8, 21, and 51 on the 3-minute chart. Let's see if we push over 48s here. I think we go up into the 50s. Test that VWAP at least on the ES here. What does a 51 EMA? I mean, it's just another moving average, kind of a bigger time frame moving average. It's more so I like to see when the 8 EMA crosses the 51 EMA. Like this here, like that's a nice cross getting back above. Because once I see that we get above the 21, the 8 EMA starts to get, we start pushing back above the blue line, the red line. Okay, momentum's pushing up, we're going. Do I think that Bookmap helped me, my entries and stuff? Yeah, I would say. I mean, right now, I wouldn't say that I would for sure jump in long right here in the past, but I'd probably be an idiot and try to get long without really kind of looking at the bigger picture, knowing that 50 seller's sitting there. Remember, we got that 350 algorithm as well. 350. Time-wise, end of day, 350 till 4 o'clock. Normally get a kind of choppy action. The biggest fish I ever caught was 317 pounds. Do I care if the EMAs are fanned out? Yeah, I mean, I would love to see them fanned out, especially like here. kind of fanning out, you know, because the thing is, like, okay, we get a nice little fan out. Let's say we're getting that push up. Well, then kind of like you're looking to jump in once we break back above here, I guess. But the problem is, you know, we already knew that we're kind of chop around this area. It's always, you know, there's so many variables that we're focused on. We're not just focused on like simply like, oh, is the EMAs fan out? Like there's so many different things that I'm looking at, and I wish it was easier to explain. It's frustrating sometimes because I feel like if I look at the chart, I can just see it and I see what's going on, but it's not always just like, can I simply just someone's calling right now. Hello? Hello? Yep. Yep. Not much, just actually live on YouTube right now. Can I call you back in like 20-30 minutes? I'm live on YouTube right now. I'm till the end of day, till 4 o'clock, and then I can call you back. What? No, Patrick Wieland. Okay, thanks. Someone calls me and they got the wrong number. That's funny. Because they're like, is this Patrick Hurley? I'm like, no, Patrick Wieland. Oh, wrong number. How does that happen? Yeah, no, it's hard. It's just experience, guys. Like this is years of obsessing. You know, 6 years of me wanting, you know, to read the Matrix. You know, the market is the Matrix. The market, you know, when you watch the movie The Matrix and the guy's like reading all those numbers on the screen, and you wouldn't be able to tell what's going on, but it just takes time. It just takes time to build up that like memory, that muscle memory in your brain where you don't have to think about what's going on. You just look at the chart, you have your setups, and you're like, this is it, you know? I mean, it's not about Andrew Tate Matrix, but I'm just saying in general, like if you watch the movie The Matrix, you know, and there's all those little numbers and stuff on the computer screens, like it doesn't make any sense, but if you train your brain to see kind of what's going on here, it's just experience. It's just time on the charts, just time. So like I said, we're looking for a push. We'll get over 48s. I think we squeeze up there 50s or higher. End of day here. We got about 20 more minutes. How does somebody call me and have the wrong number? It was somebody that I actually knew as a broker. I guess he saved the wrong Patrick in there. Am I looking for specific candlestick formations? I mean, there's different ways. People are always like, oh, you know, I have a chart and I look at like, oh, is this a engulfing candlestick bouncing monkey stick, or is this a dragon breakout? I mean, there's like 1,000 different formations. I think at the end of the day, you know, breaking through resistance, breaking through pivot points, things like that, you know, you can sit there all day long and try to memorize every possible, you know, candlestick formation in the world, I guess, or, you know, you can just look for those breakouts and breakdowns. And again, like right now, would you want to get short here? Maybe this sells off, maybe we start pulling back here, but at the same time, it's like, it's not always just as simple as like, oh, it's selling off, I want to jump in. You know? I mean, the end of day move right here, it happened at 240. I mean, this was the move earlier. That when that momentum happened there, now you can see we're just kind of chopping around here. We're still like in the middle of these pivots. So until we get like another big explosion, we get through this level here, and then it's like, okay, now we can start to do something. But this is a great example of not taking a trade here. Remember, like you can always take a trade. There's no one stopping you from trading. But at the same time, what are the odds? You know, is it a 50-50 chance that it goes up? I don't want to trade a setup that's 50-50. I might as well go to Vegas at that point. If I wanted to trade 50-50 setups, I might as well go to Vegas. Right? Like I literally might as well go to Vegas. What's the preferred account size? I think the 100,000 account is pretty good. That way you have a $2,000 daily loss limit, which is pretty doable with the ES. If you go for the bigger account for the 150, then you have a $3,000. I think that's really like the big focus. Like, what's the daily loss limit on the $50,000 account? It's only $1,000 per day loss limit. So for me, like my strategy, I'm more of like $2,000 per day loss limit is pretty good for me. Gives me a little bit more wiggle room. How do I use the Bookmap? Like right now I'm seeing, okay, look, we got 50 big liquidity at their 50s. And now I'm looking at like, okay, if we get through 50s, well, then we push up here 57, 60 area. I think that's exactly how I use the Bookmap. All right, like that's my target. I'm looking for 57, 60 area. Roosters are crowing. Let's see what happens. We're getting tighter and tighter here, end of day. I think there is a possibility of a move coming. Merrick Mueller. I'm working on we're back, guys. Give me. I know everybody's wanting it. Like I said before Christmas, I took the week off, went to New York, needed a little break from it all, and we're back. So it's coming. But if you have any questions right now, this is the time to ask. I can answer questions a lot easier than I can make videos and then have to go back and make more videos to answer more questions. So any questions you have, let's get them out. Where should I put my line? What line? Elementary student for the Bookmap tutorial. I think you guys are really overcomplicating the Bookmap idea. It's really not that difficult. I don't know if it's just me or what, but I mean, right now we're looking at the Bookmap. What do we see? What do you guys see? Look at the Bookmap. 50 resistance. Okay, that's all I see. Literally all I see is 50 resistance. Okay, that's easy. So what am I looking to do? I'm looking to get long above 50. That's literally the only thing I'm looking at here. Now we got some liquidity popping there with 47, 46s. Why not the 47s? I mean, it's a risk reward situation, I guess. If you jump in at the 47s, do we get denied at 50 here, end of day? I mean, we're going into the day. Again, think about like, it's the end of the day. We already had the big move. The market's consolidating here. Is there more power to come? Do we have more explosive power to end the end of day in the last 10 minutes? I mean, if it was 9:45 in the morning right now and we were sitting at this level, I would say, yeah, we jump in at 47. I think we have power to break through 50 quickly and then we go higher. The problem is, if we push up here to the 47s, we get stuck at 50s again. Well, now we're, I would say at this point, it really comes down to momentum. If all of a sudden we start moving quickly and we just like start to really go here again, like if we start getting buyers coming in and we start to really start moving, like we're really, like all of a sudden we just see a big change in the momentum, then I could jump in for 48 break. And then I think we get through the 50s, Do you have lifetime access for the trading group? It'll be, I think, 6 months. We'll figure it out maybe in the future. All the OGs will have lifetime. It just depends. But you got 6 months at least, minimum 6 months. All right, look, we're starting to kind of push up here. See how we're kind of moving quicker? This could start to move. So I would say, yeah, if we get over 48 here, we start going. I think we push through the 50s quickly. Just watch that. I don't want to slow down at all, though. I don't want any slowdown here. I want to squeeze through the 48s. See how we're slowing down here a little bit right now? That's what we don't want to see. We want to see it just squeeze. Do I think you can trade my strategy? Yeah, 24 hours a day, I would say. I wouldn't say it has anything to do with the daily. I mean, the market makes big moves overnight sometimes. When I say looking weak, when it's just like if the market's like right now, like we just didn't push through that level, it's looking weak, right? We didn't have we had a little explosive power, but then we got stuck there. But I would say, look, more so when I say looking weak, it's probably to the downside when it's kind of looking like a short opportunity. And that just comes down, like you'll just see kind of the buyers are pulling support. You're not really getting that explosive move. And see, this is a perfect example of why not buying 47. We had that. We had a quick glimpse of momentum, right? We had a quick glimpse of that momentum. We wanted to push, but we got stuck right there at that 47 again. I normally click it. I don't. Placing my orders. Normally, I'm just like I click buy or sell. Can you start trading on Top Step again after 5 p.m.? Yes. Well, after, yeah, it'll be 6 p.m. Eastern. So here's that 350 explosion. And look at, we're trying to do something here. Back at the 50s. So I say over 50s here, we can move. That's the algorithm at 350. That algorithm kicks in every day. And you get these pops and these drops just based on that algorithm move there. You got to always 350. If you're trading end of day, that 350 move will always kind of be choppy. And that's literally what that is. That's just literally the end of day algorithm. You got some of the bigger firms and funds that are kind of just trying to get flat on the day, looking for liquidity. If I'm in an explosive trade, and it slows down, yeah, I mean, that's normally, it depends on the slowdown. Is it slowing down, consolidating at kind of the high of the move, or is it, you know, did it get denied? Was there a big kind of crash from the resistance area? We got stuck right there at that pivot once again on the SPY. You can see like here, this, like, if let's say I'm long here and it starts to explode up, and then all of a sudden we get denied, and that we get that wick like that. Yeah, like I'm thinking about maybe I'm moving my stop and jumping out at that point. But if let's see an example here. Let's say we like push up here and then we start to consolidate, and then we're still going. Well, then it's okay. Like I'm okay with that. I'm kind of looking for like a kind of example of that when the market's slowing down. Like you can see here, like when we sold down this, we kind of slowed down here, and then that next leg was beautiful from the 82s down there. So you're going to have those areas of consolidation. You know, you're going to get these big moves down, little consolidation, and then there's that kind of next leg down. Don't be afraid of the consolidation. I think people get afraid of consolidation. It's normal. You know, the market's going to make big moves and then consolidate. It's just how it happened. I mean, there's just part of it. I wouldn't, you know, just because if you're short and all of a sudden the market's consolidating at a support level and you're like, oh shit, should I get out? I mean, as long as it's not kind of showing strength, then you're okay. Let it consolidate, and then you get that next move down. I mean, look how tight this thing's getting. I mean, we're really tight here at the end of day on the 40 to 50 level. I mean, that's since 245, we haven't really moved from the 36s to the 46s. Perfect example of just choppy, stay away from it. This is like, don't trade this. I don't want to trade this. Because this is where you end up just getting chewed up. You know, you end up trying to trade this. You jump in long, you get denied. You jump in short, you get denied. You jump in long, you FOMO, you do this, blah, blah, blah. And before you know it, you've lost $1,000. So remember, guys, it's okay to not take a trade. You know, like it's totally fine to not trade. You don't always have to be in a trade. I think that's the biggest issue for new traders, is thinking that they have to always be in the trade. Like, oh, market's open, I have to be trading right now. I gotta be long, I gotta be short. No, being flat is a position. Like literally, being flat is a position, right? When you're flat, you're not in a trade. Okay, perfect. You're doing what you need to do. Yeah, I mean, cash is a position. I get so many people that are like, oh, you know, I want to do this, I want to do that. I'm like, okay, that's fine. But I'm telling you, in the long run, you're going to end up just burning out. You have to be able to just sit here and look at it and be like, well, it's not what I want. I don't like this. I don't want to be in this. You know? I think it's really just that simple. Yeah, so the yellow is the signal on the MACD. Signal line is red and the MACD line is yellow. Yeah, MACD is yellow, signal line is red. And you can see here now on the Bookmap, look at all that liquidity. Like, do I want to jump in here at 50 if we break through 50, knowing that it's the end of day here? We got 5 minutes. We're right there at that pivot. You know, do I want to jump in there? No. Nah, I don't want to. Can it break above 50, go to 55? Maybe. Maybe, but do I want to be a part of that? Do I want to jump in and risk it? I wouldn't want to. I like to make money, not lose money. And you know, like I don't want to just take a trade just because I'm bored and I'm like, I want to take a trade. It's time to take a trade. It's funny because like literally the days where I don't even worry about it, where I just like, I don't care. Like those are the best days where I just walk away and I'm like, here's what it is. You know, no trades. And then the days where I'm like, hey, look, there's an amazing setup. Like, I don't know if you guys remember, but like, what was it, like 2 weeks ago before Christmas? We had a day where the market moved like 40 points. I made 30 handles on one trade. And it was like a $5,000, it was a $4,000 trade, easy. It was like, I was never even in the red at any point in that trade. I just was like, look at this short, guys. Hey, look, dang, short. And then it just went do. And I had no, literally no like emotion. It was just, hey, I'm jumping into this trade. It's a good setup. And then it went down I think it went down like 60 handles. I took profit at 30, it went down 60 handles. How many indicators must say yes to enter the trade? Honestly, like it's just more about the price action than anything. The indicators are always lagging. Remember that. Indicators, they're always lagging. But when the price action's moving and we're showing strength, well, that's when I want to jump in. It's even better when the indicators all line up with the price action. But if we're getting momentum, the market is moving and we're showing momentum, like I'm jumping in. It's kind of funny like that. I think when the market, like I could get rid of all the indicators 100%. I get rid of all of them. Maybe not the pivot points, but in general, I could get rid of all of them and just trade pure price action all day. I mean, it would be that simple. Like that's where you guys need to get to. You got to get to a point where it's all about price action. And like I said earlier, I mean, this is, you know, it wasn't a short, that's for sure. Definitely was not a short at the 40s. But does it mean it's a long either? No. Doesn't mean anything. Steve, you can check out the, I think Trade Evade's probably your best bet when it comes to futures trading. How do you identify momentum? I mean, if the market's moving, that's momentum. If the market's going sideways, we're moving 10 points in the last hour, that's not momentum, that's chop. That's purely chop. I mean, this thing's kind of trending higher, like it's trying to push. Maybe in the last 3 minutes here, it pushes above 50. But it doesn't mean that I want to jump in knowing that there's all that liquidity stacked up there right now. So I'm just trying to get you guys, at the end of the day, if you don't learn anything from me, if you don't learn anything about this, whatever, like you don't learn anything, just learn one thing, that you don't have to trade. Like the best traders in the world take the least amount of trades. I know some guys, like they literally they won't make a trade like for days. They'll sit there and be like, nah. They may go a whole entire week without making a trade. But when they do make one trade, that one trade is enough to pay for their whole week, their whole month. Because there's going to be days where the market's just going to, it's going to be insane. You're going to have days where the market just goes straight up, it goes straight down. And those are the days you got to stay alive for. Stay alive on those days, because then it's like there's days where it's just so easy. Like, yeah, I know we have those days, you know, every once in a while where it's just like it's almost too easy. Like those are the days you want to press the gas pedal. I'm excited for those days to come. We're going to get more of those days in 2023 when the market's just going straight up, it's going straight down. It's like, hey, press the fucking gas pedal and let's go, boys. Everyone jump in the wagon. We're going to the moon, you know? But the last thing that I want to do is try to trade every little move every single day, every little move every day, every little move. Like, you're going to end up burning out. You're going to lose. You're going to end up just quitting, because it's going to get so frustrating, because you can't be right. When the market's choppy, you're going to be wrong more than you're right. And look what happened. We're just stuck here. We're not moving. There's no reason to trade this. Zero. Look, it won't even move now. We're just stuck right here at this level. End of day. It's over. And there we go. Market is now closed for business. Hopefully this gave you guys a little bit more of an insight into kind of what I'm looking for. You know, I want it to just be so obvious. I think that's the best way to think about it. Like, I just want it to be just so simply simply obvious. Don't overcomplicate it. Don't try to force it. Don't set like goals that you're like, hey, I have to make a certain amount of money every day. Which, you know, I'm probably not the best. I probably do that more than I should. But in general, like, there's going to be days where it's just the market's not going to give good setups. It's just going to be slow. It's not going to happen. I mean, we had a perfect example of that. This last hour, what did we do? We moved, 10 handles in an hour up and down, and then look where we closed at. We pretty much closed right where this move was. So if you would have got long at the 40s, you'd be basically flat here end of day. And there's it's a perfect example of when not to trade. If we'd have broke above 50, yeah, we could have got that move up. We could have, had something going on, could have thought about getting long, but I'm not worried about it. I know there's more opportunities coming. There's always more opportunities coming, but the worst thing you can do is end up just trying to force trades constantly. You're going to end up burning out. You're going to end up just mentally losing your capital. You're going to lose your capital financially. You're going to rack up commissions. It's the worst. I did that, guys. Trust me, I have done that. I've done this for 6 years now. I've done every possible bad way of trading. I've tried to always force trades. I try to trade every little move. I try to trade the chop constantly. And all it did was end up just taxing me overall, just mentally, capital-wise, everything. You end up just giving back profits. We had a beautiful move this morning. Why sit here and try to force trades at the end of day? Don't try to force it. Just let it happen. If the market's going to give you opportunities, it's going to give you opportunities. It's that simple. I'll see you guys back in the Market Flow Trader community here later on today, and we'll do more of these maybe on Thursday, maybe Friday. We'll see. If you guys haven't already, well, you already have. But talk to you guys later.